just because I make X amount of money doesn't mean that I don't make mistakes. People always confuse capital with skills, capital with talent, or capital with knowledge, capital with understanding, right? There's doctors out here, basketball players, any sports players, actors, all types of different people with high incomes that try to get into trading, and it doesn't work out for them because it's not about how much money you have. It's about the mindset that you have and the skills that you have when it comes to putting your mindset on display. A lot of people think that it's just about reading the charts, but there's a lot of people out here that can read the charts, can tell you where the market is possibly going. But then when it comes to pressing buy or sell, it's a whole different ball game for them. It's just like boxing, right? For example, somebody who punches the bag all day, the punching bag, something that doesn't hit you back, right? Something that's not going to put you in competition. It's easy to hit that. It's easy to look good on the punching bag, right? So same way, it's easy to look good on demo, or it's easy to look good on practice mode. But when you're in the actual live markets and the markets can attack you back and actually take your money, it's a whole different ball game. It's a whole different mindset that you have to have. That's why I always tell people, yes, you don't want to trade every single day, but you want to analyze what the market is doing just for 10 to 15 minutes, right? There's no reason you should be on the charts for 40 hours a day. Like, it's not even 40 hours in a day, and you spend all your time on the charts. I kid you not. Make this a rule book for yourself. Try to stay on the charts for at least 5 to 10 minutes a day, right? Set your timer. So pick up your phone. Go ahead, type in timer. I have a fancy dancy little timer, but you set your timer. Let's say I want 10 minutes. And you can use your actual timer. So let's say, okay, my timer is going to be 10 minutes. I set it for 10 minutes. So I go on the charts. I pop open my trusty dusty laptop. I go on the markets. Okay, 4-hour time frame. Okay, it looks like it could go for. I see signs of bullishness. Okay, let me go to the 1 hour, see if I can find any type of entry. Okay, entry, maybe not today. Okay, let me set my alerts for where I would want an entry at. Boom, set my entry alerts, hop off the charts. You can do all that in 5-10 minutes. Don't make trading your job, right? Trading is your career, your job, but don't treat it as such, right? Treat it as something that's just like, because if you think about it, if you treat it that way, you're going to get, tired of it. It's going to become boring. It's going to become something that you stress about. Because think about it, right? You're late to work. You got to be to work at 9. You wake up at 8:30. You're 20 minutes away from the place. You're not going to make it to work. You're stressed, right? Now you're upset. You're stressed. You're having a bad day. Or something at work pisses you off. Now you're stressed. Now you're upset, right? That's a job. That's what happens at jobs. These are normal activities that happen as a job. But if you treat trading as something that's just a hobby to you in the beginning, you take it seriously, but it's still a hobby to you. It's not something that is going to be life-changing for you. Yes, trading is going to be life-changing for a lot of people, but when you think of it that way in the beginning, when you think of it that way, your whole focus is trading has to change my life because this is life-changing. You need to switch your mind into saying, hey, trading is just a hobby. I need to, I kid everybody. I kid you not. I tell everybody the same thing. The people that say that 9-to-5s are dumb and X, Y, and Z, those people are stupid. Stupid as fuck. Because, listen, your 9-to-5 helps you get capital. Like, it builds your capital. Like, if I go work at Walmart or if I work at McDonald's, I know I'm going to get paid in a week or 2 weeks. When I get that check, I then have to manage my money properly so I can get ready to trade. Your 9-to-5 is building skills. Now, there's going to be people on here that's going to be like, but it takes all my check. Then do something else. Always find a way. There's people out here that make up so many fucking excuses. So many excuses. Too many excuses. If you don't have capital, go get a job. If you can't find a job, go freelance. Bro, there's tons of websites, tons of services that you can do. Learn a different skill that you know could pay you, right? Learn a different skill. When I say skill, you instantly think about trading. Trading is a career that you can get yourself into. But you can't get into trading as a career if you don't even have something that's paying you automatically, right? Find something that pays you automatically, so that way every week you know you have some type of income coming in. That's your first, that should be your first mission. Find income where you can pay bills and have money to trade. If you have one job and you still like penny pinching, you have to work 2 jobs. You have to work 3 jobs. That's the whole point of it, right? If your job doesn't pay you enough where you can save some and then have some to trade, pay bills and have some to trade, that's only life telling you that you need to work a little bit harder. Okay, it's okay. You have to understand, if you want to become financially free, you want to become free, do whatever you want, it doesn't even have to be $1 million, $1 billion. It doesn't have to be that. If you just want to make an extra 3K, 4K, but you still don't have that capital, life is telling you, hey, if you want to get to that goal, I'm gonna need you to work a little bit harder. And that's the problem right there. That's the problem. People don't want to work hard. They think about it, it sounds great, they'll make all this, like they'll watch this video, they'll start making plans, making a goals, making a list, and then tomorrow they forget about it, or they'll do it tomorrow and then forget about it the next day. When this is something that you constantly have to keep beating down. Prime example, when I was 18, I basically I found out that I wanted to do trading. I found out that one job wasn't going to be enough because I had to help my mom, and I also had to put my money in my accounts. But I kept falling into a cycle of just putting all my money into an account, trying to flip it, trying to do it fast, and I kept blowing my money. And then I got into an argument with my mom. My mom was telling me trading was gambling, X, Y, and Z. I need to stop trading because I'm using the money that we need for the family to trade, and it's a no-go. So basically, I knew I couldn't go forward with just one job. I couldn't. It was going to be impossible to have capital to trade, because I'm not going to sit here and keep trading these $200 accounts, $100 accounts. I need something where I can trade and make, $100 in a day, $200 in a day. I can't really do that off of $300. Like, that's 100% gain. Like, it's hard to trade like that, right? It's possible, but it's hard, right? So with that being said, I knew I had to get another job. So I found another job. I got another job. I searched everywhere to find another job where it can match and align with what I had going on. So with that being said, you have to understand that you have to do things and you have to make shit happen in order to get to where you need to be at. So revert back to what I was saying. My first job was in the morning. I had a warehouse job, and this warehouse job was from 7 a.m. to 7 p.m. So it was a 12-hour shift. I packed pharmaceuticals, so I packed medicine into a box. I was on an assembly line with 12 other people, and we was just passing a box down the line and just like putting stuff in, right? Just putting stuff in. So I did that 12 hours, stand there all day in boots, push boxes, push crates, packed it into the truck, did everything, the whole 12 hours, every single day. I had a break for 1 hour. One was at 9:30. Blessed. Turns out life just happens the way it happened. Blessed. We had breaks. We got there at 7 o'clock. Our first break was at 9:30. It was 1 hour. So from literally like 9:30 all the way to 10:30, break, right? Break. Amazing. Second break happened to be right around that 1 o'clock area. And that was an hour and a half break, sometimes 2, because the boss was nice if we did good and we had the motion going. So that was great. I was able to stay from 1 to almost 3. Now, what I will say is not everybody will have this type of job, right? Not everybody you could find it, depending on where you're at, especially in America. You could possibly find something like this. Or what you could do which I'm not recommending, but what I used to do if I ever felt like I needed to be on the charts to look at the charts, see what's going on, always, hey, I need to go use the bathroom, 5-10 minutes. Like I said earlier, 5-10 minutes on the charts. I practiced that. That's how I got so used to being on the charts for very little time, because my work put me in that position where I didn't have a lot of time to just sit on the phone like this all day. I couldn't do this all day. Okay, boom. I need to be quick. I need to be fast, right? But I also needed to make the right decisions, which is why I'm so quick on my feet when it comes to making decisions. And I think a little bit faster because I was trained that way. But I would have never been trained that way if I didn't have a 9 to 5, which is the whole point of this. Don't let somebody tell you you don't need a 9 to 5 in the beginning, right? Of course, nobody wants to wake up every single day and do X, Y, and Z. But for me, I love my 9 to 5. I hated it, but I loved it because I knew that this was going to take me to my next level if I played my cards right. Now, I'm not saying work a 9 to 5 for the rest of your life, but I'm saying plan it out. Plan it out. You know, okay, like we all know. Some people have flexible jobs. Some people have, fixed jobs. So basically mine was a fixed job. I knew that I was going to get around $600-$700 a day from this warehouse job. I knew it every single week. I knew how much I was going to get paid roughly after tax, X, Y, and Z. I knew I was going to get roughly $600 to $700 every single week. So that way, in my head, when I go home and when I'm sitting in bed and I'm laying in bed, or if I'm just daydreaming at work, I'm putting pieces together of how I can maneuver things into the right direction. And I also made sure I budget myself extremely, because the reason why I am the way I am now, even though I have a lot of money, I budget myself because I know that the time that an opportunity comes, I need to have that capital on standby regardless of the fact. Doesn't matter how much money you have, how little of money you have, you need to be budgeting yourself, because that is going to take you to that next level of being able to take opportunities. Even with my trading accounts, I treat it the same way. Don't trade every single thing. Oh, look, that goes that alert. There goes that alert. Anyways, I budget myself and I make sure everything is right, because that opportunity comes, I need to be able to take it. With trades, I don't take every single trade because, one, everything is not your opportunity. Every single thing that pops up in your face, everything that moves in your face is not your opportunity. Guys and girls, the dating world, not every date was the perfect date for you. Not every person was for you, right? Same way with trades. Not every trade is for you, right? Not every book is for you. Not every podcast, not every YouTube channel is for you, right? Some people might like it. Some people might not, right? The things that is supposed to come to you will come to you automatically. So don't ever feel like you need to be in a rush, right? If you miss out on something, it's okay, right? It's okay. That most likely wasn't for you. And when you rush into something and you get it, most of the time, 9 times out of 10, what happens? So for the people that flipped, $100 to, let's say, $1,000 in a couple of hours, you rushed it and now you're still trying to get more trades. What ends up happening most likely? What ends up happening? You end up losing that account because now you're trying to rush to get to 5,000, to get to 10,000, right? Because your mind is just so focused on grab, instead of letting the things come to you. Trust me. When it's for you, it's going to be right there in your face. It's going to stay in your face until you be like, oh, this is my opportunity. Let me grab it. You're literally going to be able to grab it and bring it to you because the opportunity is going to be that close in your face. So with that being said, love you guys. Enjoy the breakdown. All right, guys. So welcome back to another breakdown. As you can see, your boy closed some partials on Tuesday. It's been pretty much a banger trade so far. This trade I've been holding since the 29th. As you can see, it has been a week. It was literally a week. Yesterday it really started booming, but I closed a little bit off of the push here. So right here, this push, I ended up closing some here. So I took 2 million in profit right around here. Kept the remainder. I still have a lot more to go. On my positions, I still have a lot of lots put in. I think I got right around if I'm not mistaken. I still have 300 lots on one account, and then I also have another 300. So right around 600 lots still floating on both accounts combined. I'm trading two accounts. One account is at 6.8 million, and then the other one is at 14.3 million. I still have a few other accounts that I haven't touched, but for the meantime, I'm just going to trade these and grow these back up. Not even back up, but grow these up to where my main accounts are at. So for the time being, yeah, just a little update on where I'm at when it comes to both of these accounts. Now I have withdrawn a lot. If you've seen my Instagram post, so if you've seen this post, this is my previous withdrawals on pretty much the last 5 days. So you can see that I've been withdrawing a good amount. Currently 8 million sitting in the wallet, then 25 million in real accounts. And yeah, it's looking pretty good. The fifth, I withdrew right around 900K, fourth, right around 725. Then we got another almost $1 million, but 925 if you want to be specific. Yeah, so pretty good when it comes to trading wise. As you can see, last month was really good. Last month closed around 11 million in profit. So 11.4 million, 8 days of pretty much trading out of 31 days, which is really good. A little bit more than what I expected. This was all one trade. So one trade, no trade this week. This week was pretty much one trade, and this week was pretty much one trade, so which floated into this week. But so far looking great. Nothing that I can complain about so far when it comes to my trading. I finally hit the 90% rate that I was trying to hit. Last year, you know, I got up to like 97% on the win rate. This year I've took a couple of losses because I've been moving too fast. I was doing too much with an ego, so I had to calm down. Right now, I would say that I am on a roll to hitting that 97%, trying to make sure that I play my cards right and make sure that I'm getting into the best setups that I can possible. All A+ setups, of course. With that being said, yeah, so we have right around, I would say we have right around like, what is it? This is month 8. We have like 4 more months to see what I can do. So I'm pretty excited for that. But you came here for the breakdown. I was just showing you a little bit of the stats that I have currently. Once again, it is Thursday, August 6, 2026 for future me to come back and look at this, to look at the progress, to look at this, even my future kids and grandkids so they can see this. But yeah, let's get into it. So pretty much what I did, so I was holding since, as you can see, let's see here, let's go back, give you the exact days, show you the exact days. So if we go back, July 29th is when I first placed that trade. So we're gonna go here, go to the 29th. So right around, oops, passed it a little bit, right around here. It was really right around here. Sorry, my apologies. Right around here is when I placed the trade. The trade that I had placed was at 4,081. So we're gonna come here, we're gonna type 81. If you wanna be specific, we can delete all this. Right, so this is right around where I have my trade placed. Now, one thing that I wanna say is I held this trade for a while, what felt like a long time. But in my head, there was a lot of people that said they didn't understand why I was holding this trade for so long. They didn't really get it. They didn't see what I was seeing. So today I'm going to break down pretty much what I seen. So first and foremost, if you watched my last video when we took this trade, so this trade right here on the 22nd. So we're going to go here on the 22nd. Right around here is when I placed that trade. And we won that trade right here. This trade came from this high. So remember I was explaining how price was on a downtrend. So let's go ahead and come to our left side, come to this trend line. Let's make it here and let's put this here, right? I don't use trend lines, but just to give you an example of what's going on. This downtrend that price was on, we ended up breaking out of that, but also breaking main structure.
So what does that mean to the people that don't understand what main structure mean or might be confused on what I say? So the reason why I don't use trend lines is because as soon as price breaks this trend line, most people are looking for a break and retest, or they're just looking for it to break and they'll start to buy. With me, just because it breaks your little trend line here doesn't mean that price is going on an uptrend, right? This could just be a setup for price to later come back down. So if we take this right here, let's just take both of these. We can say that price could have ended off just like this. Like, let's say we didn't have any of that, right? We could have had just this right here. So let's go ahead and select this bar right here. We could have just had this right here. This is why I don't use trend lines, because you could get misconstrued of what's going on and you make silly mistakes, which is something in trading that I don't like making. I really hate it when I make silly mistakes. I really hate when I do beginner things. Trend lines is something you're taught at the beginner level. I know ICC is something that is simple and I guess you could say beginner level, but we don't make beginner mistakes, right? I try to tell you guys all the time that every decision you make has to have a reason for it, right? And it can't just be how you feel. A trend line is based off how you feel. It can be misconstrued. You can draw a trend line like this. You can draw a trend line like this. You can draw this, whatever you want. You could have said it broke all the way over here. You could have said that trend line broke here and all types of things. You can misconstrue a trend line. So I don't use them. What I do use is highs and lows. And as you can see here, since this point, if we even track it, and you can track it from anywhere, right? You can come over here and mark up this and point out your highs and lows, and we can get into the whole nine over here, right? You can start from anywhere. The reason why I start from here is because I can visually see that price came up to this point and then it just stopped going any higher than that. That's very concerning, or I wouldn't say concerning, but I would definitely say this is something that I have to be aware of. Hey, price was going up at one point and then it just stopped here. I wonder why it did that. So let me focus on everything that happens after that, because normally what you get after will tell you why price stopped here. So basically what I mean is this information here, whatever happens next, this information, so all this, so this is one piece of information. It reached a high point and then it reversed. Once that reversal comes, everything after that is basically telling you what happened previously. So the fact that I'm seeing this lower high here, right? And I'm gonna turn this into black. The reason why I'm getting this lower high here and then another lower high here, it's all telling me what happened previously. So it's very good to have a skill where you don't just be stuck on this one piece. You're now fixated on everything that happens next, right? As I said in the beginning of this video, if you guys are watching, everything that you have to pay attention to is happening in present time. Can't worry about the past, can't worry about the future. What's happening right now? So as all this is happening, all this sell-off is happening, you have to really ask yourself, why did it sell here? Okay, and I see all this is happening. I see that it's selling off. And now you're probably asking, well, I don't care about the sales. How did you get into buys? Right? I'm trying to tell you my whole mindset. I'm trying to tell you everything that I'm thinking, right? So from here, since I seen that this was a downtrend and the last point of a lower high was here. So I'm gonna delete this. That last lower high was here. And this lower high, any lower high, so if you're on especially on the 4-hour time frame, this is the time frame that I like to mark up on. With this time frame, this is going to tell you everything. With a lower high, anything above a lower high. So if you have a lower high that gets broken, price is signaling that it wants to become bullish. The only thing with it is only above that broken lower high, right? And once again, for my beginners, a lower high is just when price comes up, but it doesn't go higher than the previous one. How do you find lower highs? visually look at it. You're very smart. You're very intelligent. I know that you can see what I'm seeing. I know that you can see this. Don't go crazy into details. Stay spaced out a little bit. Don't be on the charts like this. Don't be on the charts like this until you're experienced, but don't be on the charts like this. Space out a little bit. Make it almost come together a little bit where you can see like the whole chart, like almost like this, right? Just a little dabs out, not too much, not too little. You can see a lot. Crunch them together if it helps visually see the rejections and the highs and lows, right? You see how I crunched it together, and it's easy to see all these spikes, all these drops, all these highs and lows. You see how easy it is to see it now? Once you crunch it together, you can see it. If you need to do that, whatever helps, right? But this is very important. As you can see, on a downtrend, it maintains that the whole time. Look at this. It's maintaining all that structure. And this on a daily time frame definitely looks like something you can definitely see a little bit easier, which is why it's always good to have time frame correlation, because you might see it on the daily time frame, but it's hard for you to see it on the 4 hour, right? But all that we seen was price doing a downtrend. Made a low, made a lower high, made a low, lower high, low, lower high, low again, lower high, low, right? You see how I went to the daily and it just looks a little bit more easier? And then I go to the 4 hour and you might be absolutely complicated, or you might be absolutely confused, but it's still the same thing. It's just more candles, more information, right? So with all that being said, how I found these buys, 4 hour time frame had this downtrend, and I was pretty much trying to find out what was the next step, because the daily time frame was telling me that price doesn't want to go any lower than this. It's been saying that since June 24th, 2026, Wednesday, right? It's been saying that. It came down here, rejected. Then the next day, the 25th of June, the 26th, the 27th, the 28th, the 30th, right? The 1st of July, it's been saying that it didn't want to go down. Look at all these candles that's rejected. Wednesday, Thursday, Friday, come back Monday, Tuesday, Wednesday. So almost literally 1 week of price telling you, I do not want to go lower than 3,900. I don't want to go lower than that, right? I don't want to. It keeps telling you, no, 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 right? Bounces up off of that. It starts heading in this direction. So even from here, even from the daily time frame perspective, setting this even here, because look, price made this low. This is a lower low. It's lower than the previous ones over here. So you can see that price is going on a downtrend and makes a low. Makes this low, comes up high, makes a high. This high is lower than these, so this is a lower high. And then comes down low again, right? So now we have a lower low. That means price is on a downtrend. Price struggles to come down, so it starts to head up. Heads up for a bit, 2 days it starts to head up, and then it rejects. It says, no, we don't want to go up anymore right here. Let's start heading back down to see if we can go down. Then it tries to come down and it's like, nah, I don't think we're ready to go down either. So now it's stuck between those two levels, which is what we talked about before on this channel, a no trade zone. So since this is a no trade zone, price doesn't do anything. But then we get a breakout. And this breakout is basically showing us that it made a higher high. A higher high only happens in uptrends. So this is signaling to us bullishness, right? This is signaling bullishness. So now that we see this, we can look at this as a new high, but we can also look at this level as anything above it is going to turn bullish, right? So with all that being said, since we're seeing this on a daily time frame, we have an understanding of what levels we should be on the lookout for. So I'm gonna drag this across, right? And that's just the daily time frame, right? We took all that from the daily time frame understanding. You can do this with wherever, however on the charts. It doesn't matter where you are at on the charts. You can do this with all. right? So all that I drew up, look at it on the 4-hour time frame. Boom, we're gonna get rid of this. We're gonna keep this here just in case you might get confused, right? So now we know this was that lower high that we seen. We're gonna make this, let's make this blue. This is the lower high that was seen. This is price breaking above that lower high. Now, we can see that when price is above here, it's gonna go break. It broke. And when it broke, it went to this level, right? So we're gonna put this blue dot here. And since it went from here to here, in our trading mind, all we need to know now is if price is above here, it's gonna head to here. That's all we need to know right there. So now all we're doing is trying to wait for price to come above here to here. Now you're probably wondering, what was all this downtrend, X, Y, and Z? Like, what was up with that? Okay, price made a new high. Price was giving us a signal, whether it was going to be in 2 days, 2 weeks, a month, a year later. Price was telling us, hey, when I'm above here, I'm going to make a push to here. I'm going to do it again. I don't know when, I don't know how, but I'm looking to do it again sometime soon. And when I do, just make sure that you understood that I did that to this, right? So price goes on a downtrend. And this is because from here to here costs money, right? Whenever price is moving, any type of movement that price makes is costing money, whether it's for buyers or whether it's for sellers, right? When price is going up, that's a bunch of buyers in the market, millions, billions of dollars in the market. That means, let's say the rich people are having a blast. They buying everything, they splurging. Let's just keep it like that. When price is going up, that means whatever you're trading, investors are splurging. They spending it. Spend that shit. Spend that. They spending it, right? So since they spending it, price, the value is going to go up. Everybody wants to get in. Everybody wants some. A Louis V bag wouldn't be as expensive if nobody wanted to buy it. If it wasn't that exclusive, it's expensive because it's one, marketed to rich people. A lot of people want to be rich. So that's why you have people that are broke buying Louis V bags. So it's the same way with this. That first push up, that's just the information. That's just the advertisement for us, right? That's just the advertisement. That's to get everybody to get in, buy it all. Just for them to say, oh, we got a Christmas discount coming up soon, right? Christmas discount. But you done already bought it at maximum price. And now the price starts going down for them again. And it's like, dang, I could have just waited X, Y, and Z, which is what I want you to do in trading. That first push is just an initial like, hey, like, here's an advertisement of what we're finna release, right? The markets are saying, hey, this is a advertisement of the trend that we're finna be on. So then it gives you that advertisement and then it goes away a little bit. It builds up. It's going back to build up. So all this is a correction. A correction is only price trying to relieve itself before its big move, right? It's trying to relax before the big move, because that big move will come. When price, especially on reversals, when price shows you the signs of a reversal, it might not happen the next day. Get your mind out of things are going to happen the next day or things are going to happen soon as possible, right? Price could take a couple months before it does what it needs to do. But it's just showing you the signs. So that way, when it starts happening, you're already ready. It's always good to have your house built before the storm instead of trying to build your house in the storm, right? You can't build a house in a storm. And if you do, it's going to be the worst house ever because you're rushing. You're all over the place, right? So the market is always going to give you the blueprint before everything happens. So that way you can build your house. So that way, when it's time for the opportunity to come, you can take full advantage of it, right? So even with this being said, price goes down on a downtrend. And we're going to disregard all this over here because I wasn't too much looking at that, but I just wanted to give you an understanding of what's going on. So here, with everything here, price was on that downtrend. Price broke this lower high. So we're going to go ahead and fast forward. Price broke above this lower high and corrected. So on this, and mind you, we have our trade on the 29th. Mind you, all this is happening July 22nd, indication, price corrects. As it corrects, it comes back down, right? A lot of people try to say that ICC is just a break and retest strategy. For one, ICC is not a strategy. It's just an easy way to explain market structure, right? So in this market structure, this is just a higher high. Remember, higher highs and higher lows only happen in uptrends. So once again, higher highs and higher lows only happen in uptrends. Right? So the moment you see one of these, start thinking. The moment you see a higher high or higher low, start looking for more bullish signs, right? Start looking for more bullish signs, because now price is showing you, hey, like we just made this higher high, right? We just made this higher high. We made it above here. So anytime I'm above here, look for price to go from here to here, right? And I'm gonna move all this so you can understand. I don't want you confused by any means, right? We're gonna pull this right here. I'm gonna put this right here. I use body closes, by the way, for the people that always ask. I don't use wicks, I use the body closes, right? We're gonna move this because we no longer need this. We're gonna have this here. Just know this is the daily time frame here. So we're gonna put level from the daily, and we're gonna put this inside the box in the middle. We're gonna put this as black, italic, right? So you get an understanding. This is from the daily time frame level. So this is a strong level. Let's just put super strong, because if I just say strong, you might not understand me, right? Let's put super strong level. Can't break. Can't break. Let's just put it like that. It can, but let's just say it can't break. Can't break. That level's hella strong. Hard to break, hard to open, right? It's like a pickle jar, hard to open. You need to go ask somebody to help you open it. With that being said, from here to here is our ideal level. Now, the thing is with this, a lot of people, they think it's break and retest and they wait for price to come back down to this level. So this is what a lot of people will do. They'll let price come towards this level. They'll go jump on the 5-minute time frame. They'll go jump on this. They'll see price stalling a little bit. They'll see this, they'll see that, something like this happen. They'll be like, oh, that break and retest, boom. Then they'll get into a trade based off that 5-minute, put the stop loss here, target all the way back up here. Now, oops, let's go back. They'll go right here with the 5-minute. They'll target all the way up here off that 5-minute entry, or they'll even target something super small, like a 1-to-1 or some shit. And they don't see the fact that the 1 hour is not aligning with the 4 hour. It's still in a downtrend. Like I can see this because I've been trading for a while, but you can see that this is all a downtrend, and most likely a downtrend on the 1 hour time. And my cat, yo, what's up? Anyways, the 5-minute time frame, they won't look at the 1 hour and see that it's not matching with anything that they're seeing. They think price is bullish on the 5 minutes, so they're gonna buy. They go for the buy, and as you can see, get stopped out, right? Once they get stopped out, they'll go for like, oh, here's another retest, X, Y, and Z, price on the actual level of resistance, whatever, and get stopped out again, right? And mind you, it just keeps dumping. They keep revenge trading, and the whole time the 1 hour is just still on a downtrend, right? The 1 hour is still on a downtrend. Yet alone, it hasn't even made a lower high to break. So with all this being said, I don't like break and retest because price could come to this level and could push up, or it could just break past this level, go down more, and then come back up. My sole focus of trading is for price to repeat what it showed the first time. So in this situation, we was shown that price sells at this level, right? We was shown that price comes to this level and sells normally, right? It sells normally at this level. But there was one time where price came to this level, tried to sell a little bit, but then ended up pushing right through. That's all I'm looking for again. I'm looking for price to fall back down under this level and push back above that level again, right? That's all I'm looking for. So with this being said, you need a higher low to base price off of. So I'm gonna show you how I like to look at things. I'm gonna delete this. I don't want too much in your face. You guys start getting confused, all types of stuff. We're just gonna pull these up here though, so you can have those to read. But from this situation, I'm gonna show you how this higher low is going to be a help for you, especially when it comes to stop losses, right? A lot of people get confused on stop losses and stuff like that. I'm gonna explain the whole nine. So with this being said, trying to make sure you see everything. Let's come here, make this like that. Let's put this here, move this here, move this over here. You can see that, cool. Pause it, screenshot it, right? So from here, we're still on the 1 hour time frame. So once you find those 4 hour levels, so 4 hour time frame, once you find those levels, you don't have to stay on the 4 hour time frame, right? You can now look at the 1 hour time frame because that's where your entries most likely are going to come from. The 4 hour is just so you can mark up those levels, right? We would have never got this level without that 4 hour time frame. Everything's happening, every simple and clean. Even if you came to the charts right here, right? Your goal is to go based off of what previously happened. Okay, price is here. How did it get here? Oh, it bounced from here. So this must mean that this is my higher low. Why do I say that this is a higher low? Because I can see that the last time price really made a, I guess you could say a solid bounce off of something is either here or that daily level. As you can see, price went into it, bounced from here, came up a little bit, struggled, then bounced again, right? And once it bounced again, it pushed through, and then we have that. You could say this, but yeah, if you really want to be picky, but the ones that I would really say is really this level. I really was looking at this level only. I was not looking at this. The reason why I was looking at this the most is because it came off of something that was, you can obviously see, was very detrimental to this trend. Price came up to a lower high. I would even count this whole thing as just that lower high level. But if you really, really want to be picky, then you can use this as a lower high too. But I'm not that picky. When I see just one level, I can make it make sense. Okay, this whole general area was sellers pushing price down. This whole general area was buyers getting pushed up. So I'm not just looking at every little crevice of the chart, right? I can just understand that, okay, this level was that strong level that price pushed off of. Boom, it pushed all the way up to here, right? Price hit this level, strong amount of sellers came in, right? Not looking at every little bitty detail. I just look at this whole piece right here. This whole little piece right here, just this whole piece, right? Just that. So with that being said, this higher low is here. And for one, this is a Friday. So what I am finna explain next varies depending on what's going on. A lot of people ask me, how come I didn't take the first, I think it was the first buy up. And the reason why I didn't take that was because of this. So as you can see here, boom, price didn't buy up. Then we had a gap up on the 26th. Price was selling off Friday, 26th. So Sunday opening, it gapped all the way up. And I just didn't feel comfortable with taking a buy on that gap up. Now, the reason why I didn't want to take a buy on the gap up is only because that when price is gapping up, normally it comes back and fills the gap. I don't want to be one of those YouTubers where it's like, oh, you can trade that. Don't trade that. I don't want to trade that. I don't want to trade a gamble. Gaps closing is really a gamble because you don't know if it's going to happen the next hour, the next day. You don't know when it's going to happen. I don't want to trade anything that I don't have full control over. So when it comes to this, I don't really have a full control over the psychology that comes behind it. is basically what I'm saying. If I don't have full control of what my psychology can be, I don't want to trade it, right? With a gap, I'm going to be thinking in my head, is it going to happen now? Is it going to happen later? When is it going to happen? How much should I put? How much should I risk? Where should my stop loss be? It's too much on my brain. So I don't even want to think about it, right? With that being said, I'm going to then be like, okay, well, let me not trade that. Let me wait for something else. So that is the reason why I didn't trade that, right? So price once again didn't do anything, came down to this level. Now this is very, very important, right? The reason why this is very important because a lot of people, they get into the habit of just thinking if it's not doing what I think it's doing the opposite, right? And it's good to have that, but it's also bad to have that because there's moments like this where a lot of beginners think that this is just a downtrend from here. They'll see a couple candles repeat and they'll think that's the trend instead of looking at the whole picture. Yes, we made a higher low. I mean, a lower high, but we also made a higher low. So that means really in between these two levels, price is in a no trade zone because it's doing two different things. Let's just call this, what do they call it in smart money concept? Divergence, right? Let's just call this, what's that? Can you find a difference? Now let's call it something cool. Let's say that this is no, I'm just joking. Let's call it NTZ, right? A no trade zone. And the reason why this is a no trade zone is because it's both fighting against each other. So we can even call it a balance, right? Call it a balance. Make it easy for yourself, right? And when a balance is happening, this is normally when you have equal buyers, equal sellers, and price is not going in any direction, right? So with this being said, what I did differently on this trade was I seen this, and this could have been my no trade zone, right? This could have been my no trade zone, but I also was trying to follow this. And the reason why I followed this more is because this could have just been price buying up, but didn't have enough volume, right? Because remember, this was Sunday, the 26th, right? Sunday afternoon, Sunday night, dinner time, market just back reopened. So I took this as like, oh, it just didn't have enough volume. Monday came in, it sold off. I was like, okay, well, it didn't break past the level that I need. It just kind of fumbled in this area. It didn't really do anything significant, so I'm not worried about it. So with all that, price ended up gapping up, right? Gapped up Wednesday, and I was like, wow, price is buying. So I actually got into a trade, right? I got into a trade. Price on the 1 hour looks kind of crazy, but price on the 1 hour did break, but 4 hour time frame, you see something completely different. The 1 hour time frame, once again, I seen that price was buying up. I was like, oh, well, I think this is the perfect time to take a trade because price is back above that level that I was looking for, this level, right? Mind you, price already touched this level. Now, this is where everything gets a little bit more complex on the psychology part. I enter my trade here. Price went from here to here, which is what it did previously before, here to here. So honestly, by what I'm telling you guys, the closure should have been here. But in my head, I'm still thinking of this because that's what the 4 hour time frame is looking like, right? So if we go back to the 4 hour, that's what I see on the 4 hour, the main structure that I'm going off of. My target, my entry is based off the 4 hour. The 1 hour is my entry levels. And these are two different things, right? We don't see this on the 4 hour time frame, right? We don't see all that on the 4 hour time frame. We just see price came up, fell to go, went down, created a no trade zone. 1 hour, we see a whole downtrend and some more. So I didn't want to go based off the 1 hour anymore. I just wanted to trust the 4 hour time frame. I wanted to believe that the 4 hour time frame was going to be way stronger than the 1 hour. I just needed the 1 hour to match. So that's why I ended up placing a trade here. Now, what I did this time, which I normally do in all my trades, but what I did this time was I actually put my stop loss down here. And the reason why I put my stop loss down here is because I believed in the 4-hour was going to complete what is done. So it's already shown me that it's ready to come above this level. So we're going to go out a little bit more. And yes, I was in drawdown, as you can see. And I was in drawdown for a bit, had a stop loss like right around here. And first I target here. I really wanted just to get this far when price sold down. But overall, I started to target more. I started to look for a bigger position. Overall, the TP wasn't my main factor, and that's okay. As a trader, it's good to have your target in mind. It's good to have where you think the markets is going to go. But at this time, all I'm thinking about is the market just showed me signs of bullishness. I needed to follow through with what it said, right? So at this point, I'm on 4-hour time frame and I'm just looking at my position. Mind you, I had that position on the 29th. So as you can see here, 29th. That 22nd, matter of fact, let's go back to that 22nd. That 22nd, I did actually trade that. My apologies. I did trade that. And I'm pretty sure I explained that I was looking for pretty much price to push to this high. My apologies once again on that part. But I did end up trading that 22nd because everything was showing signs of bullishness. Price didn't want to go any further. Once it didn't want to go any further, it also broke above a lower high, which I felt good to place a trade. And I ended up exiting right around this high. So I took this to this, which in my opinion is a little bit risky, but sometimes you got to make a couple risks, right? And I once again got into that trade because price didn't go any lower and it broke above a lower high, which is two bullish signs. It didn't want to go down and it broke above sellers. But yeah, on that 29th, I ended up placing the trade. I was in drawdown for a bit. Price kept fluctuating in between one of the two, just not really doing too much. And then we finally got that push, right? Once we got that push, it was like, oh, this is great. This is amazing, right? So I was like, okay, this looks great. Then we got this, another drop, right? And a lot of people will be like, well, you should have closed because this level here, right? You should have closed because this level got broken. But in my head, remember, from here to here is already where I should have been in a no trade zone. This whole trade should have really been a no trade zone, and my position should have came from above here or below here, right? So in my head, if price didn't break out of any one of these levels, my trade possibility could still be in play, right? I'm going based off that 4-hour, right? The 4-hour just came back above this level for the second time. And if we was using the 4-hour candle here and using the wicks, this is a new high, or using the candle close, this is a new high. And price didn't break a level of support yet. Nothing showed me significant signs of a breakage of a support. So I continue to hold that trade because I didn't see anything that broke that level. Then price ends up stopping in this area, creating another, I guess you can say another low. We couldn't really call this a higher low, but once again, I'm technically in a balance, right? I'm technically in a balance, but I'm still going based off of this. Now, not going to say that this is going to work all the time, but this is just me showing you my psychology, the trust that I had in the market's 4-hour time frame that it gave us before, the clues that it gave us before, to be like, hey, I'm going to keep holding this trade until it stops me out, right? So from here, I just continued to hold that trade. Price kept coming down here, wicking out over here, not doing too much. And I was like, okay, cool. I'm going to just wait. So then we finally got one more break above here. And mind you, if you look here, it keeps coming to this level. Every time it breaks this level, it comes to this level and reacts. So this is telling me that there's a lot of sellers at this level, right? There is a lot of sellers here. So now I just need price to break above this level and I know we're gone. So if you check my tweet, so if we go here, we go here, come back over here. So if we go here, come here, go all the way down. 29th is when I called out that trade, by the way, on Twitter. So if you want some of my trades, go to Twitter and Trades by Sai on Twitter and you'll see me call out trades. But this is the day that I took the trade. And as you can see here, Let me see if you guys can see that. As you can see here, we have that lower high, and I wanted to trust in that lower high because this is what I seen. I seen price came to this level, respected it, and built up off of that, right? So since it built up off of that, I was thinking that price was just going to go from here to here. So that's the same thing that I was thinking. Price ended up breaking, going higher. It was great, sold off, but it didn't break this level. So honestly, I just kept holding. With this being said, moving all this out your way, I told myself that, hey, if price breaks here, I'm in the green, but I'm gonna hold until price breaks below here, because what I seen first was price respected this and this, and it bought up. But then it changed in between my trade. Everything changed a little bit, but I stuck to what my plan was. When I first entered this trade, I said, hey, I'm entering this trade, but my stop loss is below here. Gave my trade some room, and I was like, hey, I know that the daily time frame doesn't want to go any lower, so I can see visually that the daily is saying, hey, we don't want to go down. So if we don't want to go down, we're going to try to look to build up. And if it's going to build up off the daily, if I'm looking at price, it was just in a downtrend. So if it's not going down anymore, that must means the daily is trying to build an uptrend, which is massive, right? Which is really good for me to be in. So I need to focus on trying to get into this trade. Hence why I'm still trying to hold this trade for the next couple of weeks, because this could be a massive trade off of the daily time frame. So with all that being said, price ended up coming back above that level. And then this time on Tuesday, August 4th, it gave us the volume that we needed, which ended up pushing all the way up to this high, right? Came to this one, gave a little bit of reaction. So we can go once again back on that 1 hour time frame. We can go back on that 1 hour time frame, and you can see even here, even if we was to pull this out, hit this right here, boom, New York session, hit this right here. Actually, this happened it looks like this one happened during London session, or actually happened Asian session. Wow. I was going to say the volume kicked in, but I guess everything kicked in that night, but that's okay. That's cool. That sounds like something gold's been doing for a while. As you can see, let's see, let's go here. Let's change it to Asian session. You can see that price moves a lot during Asian session now, ever since the whole Iran thing has been going on. Price just moves whenever. But if you set alerts, it is definitely good to set those alerts, and you won't miss any trades as long as you're staying vigilant on those alerts. But yeah, this is prime example of pretty much market structure broken down T for T. Back above this level, once again, we got that push, that volume finally came in from here to here. Price took that out and went straight to this one because it was so much buying volume. And I'm pretty sure there was a lot of buying volume, just because the simple fact of, even if it was one of those situations where we was to basically remove all this. So even if we removed all this, right? If we removed all this, a safe way for a beginner to enter this trade, or a safe way for anybody to enter this trade, if they didn't want to do exactly what I did, was to just enter back above here. If this is your balance zone, right? If this is your NTZ zone, boom, this is your high above that level. This is an indication, indicating that price has potential to go bullish above this level, right? So even placing a trade here would have been valid, right? Go on the 1 hour time frame, price came above here. This would have been your higher low, or a higher low that price bounced off of. You could use this as a stop loss level. Use this as a stop loss level, and then target this level. But since you're trading the higher time frame, you can always target more, and X, Y, and Z, right? The risk to reward, it looks low, but when it comes to trading the higher time frame, you could get way more than that. And to be honest, whenever I'm trading the higher time frame, I'm gonna be a super big ego on this. But if you're trading the higher time frame, you're doing everything correct. You don't even have to worry about a stop loss. Not saying don't put one, but yeah, when it comes to that, just make sure you guys are paying attention to every detail that the market is doing, because everything adds up. And when you add all the facts together, it's only one direction that the market is showing you that it's going, right? So with that being said, I hope you guys enjoyed this breakdown. Price is currently ripped up. So yeah, yes, price went way further, continued to go higher. And if you was to take this from here and then go all the way up here, you would be right around a 1.5 if risk to reward matters a lot to you. 1.5 or a 1 to 5. And then we have so much more to come, because once again, this is something that I'm seeing the daily time frame basically make a whole new uptrend just to come back up for all-time highs possibly. But yeah, I hope you guys enjoyed this breakdown. Very extensive from every level of thinking that I had. And yeah, make sure you guys remember to, if my stop losses look too big, if you can't do what I'm doing in a sense of position wise, you can always lessen your lot size, your contract size, to where you can put a decent amount of space on your trades, right? I'm a swing trader, right? I don't want to put tight stop losses and then come back an hour later and get stopped out. I know that the market is volatile. I know, especially when it comes to trading gold, I know this market is volatile, but I also know that the chances of price following the higher time frame is super high. But you're seeing all that fluctuation just for price to give us that. We got it in the end, but if we had a type stop loss, we would have kept losing money. I'd rather lose money one time than keep trying to get into the trade and keep losing based off a tight stop loss. So put a good stop loss under a level where you don't want to see price get broken. So in this case, I don't want to see price break a support if I'm in buys, because the support is where buyers are at. So if it takes out the buyers, then why am I buying? With that being said, hope you guys enjoy the video.